The momentum indicator is one of the simplest and most understandable oscillators and comes standard on most trading platforms. It is often used for a general, superficial assessment of price action over a long period and for forecasting. Although momentum cannot be called ideal, it is often used in simple, intraday strategies to confirm signals. In this review, you will get acquainted with the principle of calculating the oscillator and its modifications, with advantages and disadvantages, and learn to recognize its signals and apply the tool in practice. Momentum indicator. Background. The momentum indicator is a simple leading oscillator that characterizes the change in the price of an asset over a fixed time period. French mathematician Paul-Émile Oppel, who worked on mathematical analysis, theories of geometry, and mechanics, is considered to be the author of this indicator. Momentum received recognition and became popular thanks to the trader Martin Pring, who was also involved in the development of technical analysis patterns. Pros. Momentum advantages. Clear logic of calculation. The indicator analyzes the ratio of the price of the current candle in relation to the similar price of the candle for n periods. The price type is specified in the settings. Open source. You can refine the indicator for your trading system. Clear interpretation of signals. If the indicator values are growing and the indicator has passed a certain median line, there is an uptrend. The median line is determined by approximation. The horizontal level is fixed in the settings. The absence of fixed levels is an advantage and a disadvantage at the same time. If the stochastic indicator has clearly defined the 80-20 overbought/oversold zones, then the momentum indicator will not have them. To draw them, you need to zoom out and visually determine which line the oscillator is moving relative to. Cons. Advantages of momentum signals. Unstable results. If there is a sharp local price surge relative to the prices of previous periods, the momentum tool will immediately react to it. Partially, this disease is treated in two ways: setting a higher period and increasing timeframes. A higher period allows you to smooth out the indicator line, making it smoother and therefore allow it to more accurately reflect the real market situation in relation to the historical period. Recommended timeframes are from M30. The need for constant optimization. If the volatility has sharply increased, you need to revise the value of the period downward so that the indicator compares the genuine latest prices. If the price has moved to another price range, you need to change the values of the median level and the levels of the overbought/oversold zones. Regarding the settings of levels and periods, the indicator allows complete freedom of action. There is no rigid algorithm and everyone can adjust the chart to fit their trading system. Beginners may find this difficult. How do momentum indicators work? Description of the momentum indicator. The indicator compares the current price with the price that was a few candles ago. The calculation formula is as follows. Momentum equals close I/close IN 100%. Close I is the closing price of the current candle. Close IN is the closing price n candles ago. The oscillator is placed under the price chart and is a single solid line. In the description of the momentum indicator, most often in the settings, the level of 100% is indicated as the median line, which means that the current price is equal to the price that was n candles ago. This level is called the zero mark. This is not entirely correct, because depending on the period, this zero level will be located on different horizontal lines. Interpretation of indicator signals. 1. Indicator reversal at the highest extremes. The signal to open a short position is formed at the time of the formation of the highest top, while the long position is formed at the lowest point. To search for a strong extremum, you need to plot the level of the previous highs/lows on the chart. This graphic shows that the indicator most often reversed at the level of 100.52. A breakdown at this level is a preliminary signal. When the indicator reverses, open a short position. This approach reduces the number of signals but makes them more accurate. In theory, you can target any highs and lows above or below the median level. But such a strategy gives a lot of false signals and does not allow you to estimate the duration of the reversal movement. In the proposed system, weak signals are eliminated and the transaction is opened in the direction of a strong reversal movement. 2. Divergence. Momentum is a leading indicator. If the chart shows a diversified movement of the price in the indicator, this indicates that the momentum is ahead of the price and the price will turn towards the indicator in a few candles. Bullish divergence is built on the lows. The lows of the indicator are rising, and prices are falling. Bearish divergence is built on the highs. The highs of the indicator are falling while prices are rising. An example of a bullish divergence. The divergence is clearly visible on the reduced scale of the chart. The lows of the indicator rise, but the price goes down. After the end of the divergence, a strong uptrend began. 3. Breakout of the median level 100 in quad. According to the theory, the base level relative to which the momentum moves is the 100 mark. If the indicator started its upward movement from the bottom of the chart, crossed level 100, and continued to move, this is a signal to open a long position. If the momentum gauge stays above 100 for a long time, an upward movement dominates the market. The mark 100 is the base level that is needed to understand the principle of searching for momentum signals. You don't have to link to it. You can set any level that you wish. Based on the basic idea of calculating the strength of the price impulse,